When I started Module 2.2 case study for hair salons and tanning salons, when I started teaching value adding versus discounting over 10 years ago, I created a lesson that was taught in beauty colleges throughout the United States using a specific example of how a hair salon could add in value. What I was consistently encountering in salons as I observed new stylists start out was that their go to move to build a new clientele was to offer a discount. It didn't result in them building a loyal clientele, as anyone that has a good stylist is loyal to them, and 20 bucks off or 20% off a hair service isn't going to sway them to leave. But it will attract the discount shoppers. Come 2 months later, when it's time for another haircut, they will move on to the next available deal that they come across. So let's look at an example of a normal service. For the purpose of this example, a cut and color costs $150. The client will pay a 20% tip, which is another $30, and the client pays a total of $180. If you take this same service and offer a free cut with color, and we'll say that the cut is valued at $50 to make the math simple, the cut and color then costs $100. The client leaves a 20% tip, which is now only $20 because they weren't savvy enough to base it on the value. They based it on what they were paying. And the client paid you $120. You lost $60 in profit, and the client got $150 in value. Now let's look at the value added version of this situation. The client comes in, they pay $150 for their cut and color. They give you a 20% tip, which based on that full price is $30. And you give them a gift. This time it's a bottle of shampoo. That bottle of shampoo retails for $16, but your cost wholesale is $8. So the client pays $180, just like they did for the normal service. Your profit is only affected by $8, and the client got a value of $166. So these three scenarios show you the difference between a normal service, a discounted service, and a value-added service, and how, by adding value, you're still getting your clients in the habit of paying that additional money. So the most successful value-added campaigns that we ran at one of my salons was to buy a $50 gift card and you get a free pair of Havaiana sandals. Anyone familiar with Havaiana sandals know that they retail for $20 to $30. And I was in luck as our distributor was having a huge discount on a bunch of styles that they were discontinuing, and I picked them up for $5 wholesale. Our spray tans cost $45, so if someone bought a $50 gift card, they would have to come back and spend the $5 on another service. They felt like they were getting a killer deal by getting the Havaiana sandals for free. It was barely costing me anything, and I was guaranteeing that they came back in another time. And if they didn't and never came back to spend that $5, they just paid for the Havaianas. So it didn't cost me that much. It definitely didn't cost as much as if I was giving something else away. But you just have to keep your eyes peeled for things that you can use to value add that aren't going to cost a lot of money. So we're now going to look at how membership-based business creates value. Some of the best examples that I've shared with you so far have come from the lessons I've learned in making mistakes in my businesses, and this one's no different. So let's take my tanning salon. We sold memberships. We had enough memberships sold at each salon to pay all of the bills, cover the payroll, and all the overhead expenses. So everything else coming in and selling was profit. I had one issue. Our members didn't spend money on anything else. They came in, they got their spray tan, they left. They didn't buy retail, they didn't pay for upgrades. So how could we get them to be a business driver? We started a buddy pass program. Every month, every member got 2 buddy passes. Tans cost us about $5 in overhead and materials, so I let every loyal customer give away 2 tans a month. The rules were their buddy pass had to be used by somebody different each time, and a person could not use a buddy pass more than once in a 12-month period. This not only drove new clients in, but also drove more memberships. So here's a way to look at how the numbers break down for a membership-based value add. This could be a gym, a salon, whatever type of membership-based business you want it to be. So normal membership, client pays $100 a month and they get their membership. Let's say you do a membership drive and you're going to do a first month for 25% off. So your client pays $75 and you've got a negative $25 in profit. But you do value added and your client pays their $100 a month, but they're getting something extra like a buddy pass, a personal training session, merchandise. So you're adding value with the little things. Remember, you can add value wherever you see, but adding it on directly to a purchase is a great way to start participating in that practice.